Assalamualaikum warahmatullahi wabarakatuh. Good morning, good day to you all. My name is Meilana Chorisa NURAINI. I'm from Universitas Dinosantoro. Today, I will present my article to the first International Conference on Business, Economic, Accounting, and Technology 225. Without further ado, I will open the article. My article is titled Determinants of Firm Value, Solvency, Firm Growth, and Dividend Policy Impact on Food and Beverage Company. Next, first of all, background and problem. The Indonesia food and beverage industry held a strategic position as it drives growth, support export, and strengthen the overall national economy. The industry above average growth reflected a strong potential in raising investor interest, positioning it as one of Indonesia's most dynamic sector. Plus, industry growth doesn't necessarily translate into sustained firm value as long-term creation depends on firm-specific factors. Firm value reflects how the market perceive a company's prospect and success, making it central to investor assessment. It is significant as can extend to manager for strategy, investor for decision making, and policymakers for economic planning. Next, the link between solvency, firm growth, and dividend policy and firm value remains unclear, with mixed findings underscoring the need for further research in Indonesia's fast-growing food and beverage sector. Next, objective and methods. The study examined how internal financial factors shape firm value in a key growing sector, offering insight for the companies, investors, and policymakers. Annual reports are used as the variable audit data and multi-year coverage to capture consistent patterns. From active for food and beverage company on the EDX in 221 until 224, 13 meet the criteria, and after excluding 5 outliers, 47 observation remain. The period reflects recovery and expansion, with firm boosting competitiveness and attracting investment amid rising investor interest. Next, the dependent variable. Firm value measured by price to book value. BBV compare the market price with the book value per share. It shows shareholder with creation, but BBV more than 1 means the firm value is overvalued, and BBV less than 1 indicates undervaluation. Independent variables obviously measured by debt to equity ratio. There compare total debt to equity. A high there shows strong funding access but also higher default risk, influencing investor perception. From growing measured by total asset growth, TAG measure asset change year to year. Higher growth signal expansion potential and attract investors by indicating future profitability. Dividend policy measured by dividend payout ratio. DPR is the ratio of dividend to net profit. Consistent payout signal stability and growth, so their effect on firm value may vary. Next hypothesis. Hypothesis 1, the level of solvency has a favorable impact on firm value. A higher there signal the firm's ability to access external funding and meet obligation. This signal can enhance investor confidence, which in turn increase firm value. An increase in firm growth positively affect firm value. An increase in total asset reflects sustainable expansion and improved operation. This growth signals future profitability, attracting investor and raising firm value. Hypothesis 3, dividend policy support positively to the value of the firm. Regular dividend indicate inconsistent profit and financial stability. This signal enhance market perception and accept to increase firm value. Next result in discussion, key findings. Regression results show the solvency has no significant effect on firm value, firm growth has a positive and significant impact, and dividend policy is positive but insignificant. Together, the three variables significantly influence firm value. Talk the explain only 11,8% of it is variation. B. Interpretation of result. Hypothesis 1, solvency doesn't support the hypothesis. I'll take hypothesis to have a positive effect. There show no significant influence on firm value, meaning solvency is not a key consideration for investors in this sector. Hypothesis 2, firm growth support the hypothesis. As a predict, firm growth significantly increase firm value, indicating that asset expansion sends a strong signal of profitability and better prospect to investors. Hypothesis 3, dividend policy doesn't support the hypothesis. The effect of dividend policy is positive but statistically insignificant, showing that dividend distribution alone is not strong determinant of firm value. Simultaneous combined effect, when tested together, solvency, firm growth, and dividend policy significantly influence firm value, even though not all variables show individual significance. Firm growth as dominant factor. Firm growth emerges as the most influential factor, while solvency and dividend policy play weaker and insignificant roles in shaping firm value. See implication of findings. Managers should focus on sustainable firm growth since asset expansion sends a positive signal to investors and strengthen competitive. Investors may rely on growth indicator as strong signal of firm value than solvency or dividend policy, aligning with signaling theory on information asymmetry. Policymakers can encourage transparency and growth strategies that provide clear signal to the market, supporting higher firm value and industry competitiveness. That's all from my article. Thank you. Have a good day.